Good afternoon and welcome to another edition of the CannaList Conversation. We are joined today by Mike Goral, who is the National Cannabis Tax Partner in charge, and we'll figure out what that means later, with Armanino. Mike, how are you?
I'm doing very well, Mike. Thanks for having me.
Absolutely. That's a pretty fancy title, huh? The partner in charge. Does that make you king or what does that make you?
No, that means that's when things go wrong, I'm the one that clients yell at.
So you're the one to blame.
Yeah.
So what could possibly go wrong with taxing cannabis?
Yeah, nothing. Just 280E, a few things that come in here and there. It's always a little crazy. And, unfortunately, a lot of people thought when Biden came into office that, things would change very quickly and help the cannabis industry. And we found that it hasn't been so until just recently. He did, offer that pardon for federal inmates that have been charged for, minor infractions of cannabis possession. And they're supposed to be looking into changing cannabis from being a Schedule One drug, but there's a big difference between descheduling, which would maybe make it Schedule One to maybe Schedule Two or Three or something like that, and unscheduling cannabis so that it would not be even a drug that would fall into any of those restrictive categories.
So from a 280E perspective, what kind of classification do we need to eliminate that?
Well, we needed to get it out of Schedule One for sure. There's some debate about whether Schedule Two or Three would be enough, but just a complete, blanket, removal of cannabis as a Schedule One drug should be what everybody's looking for. Because if you get into Schedule Two or Three, then there's some issues there that draw a fine line, and it's a gray area as to whether 280E would apply or not. So what you want and what you want your members of Congress to do is to deschedule cannabis so that it's not on any of the Schedule One, Two, or Three drugs.
And we've talked a lot about 280E, but just for those folks who that might be a new term, can you sort of give us the highlights of why 280E is so painful to cannabis businesses?
Yeah, back, during the Reagan administration, there was this whole war on drugs that Nancy Reagan was really promoting. And so what evolved there was this scheduling of drugs. So, heroin, cocaine, all the bad stuff, was Schedule One. And cannabis, marijuana became a Schedule One drug. It got thrown into that same, classification. And when it got thrown into Schedule One, there was a tax code section called 280E that says, hey, if you are a Schedule One, company that is, trafficking these drugs, selling these drugs, marketing these drugs, then you're subject to 280E. And 280E says you can only take your cost of goods sold as your only deduction. So if you're a cultivator, it's not that big of a deal because 95+% of all of your costs are, to grow the plant. The problem comes when you're like a distributor or a dispensary where your only, cost of goods sold is really what you bring in to the store and then what you store in inventory at the store. And so you just, all those bud tenders and things like that, you just can't deduct those costs. You can't deduct advertising costs, marketing costs, and those are big expense items now. And as we've seen this industry grow from the West Coast now to the East Coast, it's those companies that have really recognizable brands that are getting high premiums, that are getting the funding to be able to expand their brand into other markets. And yet all of that advertising costs are just not deductible. And it really has a huge impact on the earnings of a cannabis company versus a non-cannabis company.
Yeah, I mean, and the irony, as you indicated, is lumping cannabis in with heroin and those types of drugs. Because I'm hard pressed to believe that the heroin dealer is filing his tax returns, right? You know, it's,
Right.
yeah, so,
Exactly.
you know, these are different businesses on different, you know, on so many different levels.
Well, and that's for that matter, the illicit market is not paying those taxes either,
Right.
which really makes it so expensive and difficult for legitimate companies to compete with the illicit market because, they just don't have all of those costs. And then even if they do get caught, the penalties is a slap on the wrist, and they just turn around and open up another shop, down the street.
And without the deschedulization, will federalization eliminate 280E, or do we have to have that deschedulization of the drug?
Well, that's kind of the same. The way descheduling would happen is through federal legalization,
Right.
and so it's just a process of getting it through the system. And the way to do it through the system is to have the federal government, Congress, you know, change the law so that it is no longer a Schedule One drug that would be subject to 280E.
So again, as I mentioned earlier, we've talked about 280 a bunch. What are some of the other concerns, especially the tax implications around the cannabis industry beyond 280E that folks should be aware of?
Well, there is some good news there. There's a number of states, such as California and New York, that have decoupled from the federal rules. So on the state income tax returns, you don't have to worry about 280E, and you take all your deductions like you would in a normal company. So at the state level, we do have some relief there, but unfortunately, it's the federal taxes that make up the bulk of the liability for these companies, and that's why it's so important. The other thing is that the cannabis industry really generates a whole lot of ancillary businesses and taxes that go along with it, sort of like the automobile industry, where if you open up a plant, an automobile plant, then you've got all these suppliers that are bringing all the parts and things necessary to support that plant, and so they can produce their product. Same thing happens with cannabis, and it's a real boon to the rural areas of the country because you don't need to be in downtown anything other than maybe say a dispensary, but all the other parts of the cannabis industry can operate in rural areas, which has been a really big boon for the economy. And I think that's why, a lot of these states that are looking to legalize cannabis for adult use are looking at it very strongly because, even if you're in a very conservative state, you can't deny the tax revenue that it generates. And, as long as you keep the tax rates low, then these companies can, make a go of it and make a decent living and, help the economy as well.
Yeah, I mean, what's interesting is when we talk to our clients, we're telling them, you need to be in it for the long haul. You need to be in it for, 5 years from now, because 280E isn't going away anytime soon. We have no timing on the horizon with regard to that. What's your sense of like, you know, how can these businesses sort of survive and deal with the tax implications to get to the other side?
Yeah, and I think it's been very, well publicized that a lot of the large MSOs have not been paying their taxes, and what they're doing is using the IRS and the federal government as a loaning mechanism by, not paying those taxes and using those funds instead for operations. And unfortunately, in this era of high inflation and high interest rates, it's very difficult for all these companies to operate. And most of them had a business plan where they wanted to get out, 3 to 5 years once they started, operations. And I think they need to, as you suggested, stretch that out for another 5 years because we're just going to go through a difficult time here for the next couple of years where money's going to be tight, and it doesn't look like we're going to get relief from the federal government from taxation. Certainly state and local governments are taxing this industry pretty highly as well. And even with the recent changes in California where they eliminated the cultivation tax, it's a little too late. And these states need to recognize that, look, this industry is a boon for your economy, but don't kill it right off the get-go. Give them a chance to get going, get everybody on the tax rolls, get everything stabilized. And then if you need to increase the rates, go from there. But don't start off at a high tax rate and then, you know, just put this industry out of business before it really gets going.
Yeah, I mean, clearly, they're missing the economic development aspects to it, right? Where, there's job creation, like you said, there's a revenue base from the tax base. We've seen that in Colorado, we've seen that in California. The challenge we see here in California is, like you said, many folks have been in this for years already. And, they're tired and frustrated because they are looking at another 5 years, before things will be reasonable.
Well, and there's a little bit of, you know, criticism. I think that people would say that, look, none of my clients really that I know of really are looking to form a legacy company, that would be passed down to their kids and grandkids and start, a company like Hershey's, that started in the 1800s that, just keeps going on and on. Most of them are all looking to get in and get out. And I just think that this industry is not going to be one of those get rich quick kind of schemes. I think if that was what you were looking for, then this isn't the place to be. I think that you really need to be passionate about, this industry, about your product, about what you're doing in the industry.
Mike,
And
I think
then,
you just crushed the dreams of half of our audience, but thanks.
but you got to be passionate about it. It's not going to be, hey, I can get in and get out and make millions. It's people were paying, in California, 3 or 4 years ago, a huge premium just for owning a license with no operations or anything else. And those days are gone. And if you didn't get out by then and you're still in it now, there's a lot of competition, particularly in California. And as we've seen in Michigan and other places, the price of wholesale flower is dropping quickly. And so you can't operate thinking that, hey, you're going to get $2,000 a pound when the market's going to pay you, 800 or so a pound. So you've got to rethink your timeline and where you want to go with this.
Yeah, I mean, one of the things that we've said is, be careful what you ask for, because, while legalization will have lots of benefits, it's going to change the marketplace, right? That'll open the door for all the big players.
Yeah.
And either we'll see a tremendous amount of either consolidation, M&A, or bankruptcies, which you can't even do bankruptcy with cannabis, right? So we have other issues.
Well, and as we've seen in the hemp industry, the Farm Bill in 2018 made hemp federally legal, and we still see so many issues with companies, just trying to get bank accounts with a hemp farm or something like that. Even though it's federally legal, it doesn't matter. It's going to take more than just, legalization to change this mindset. And so even if we got everything that we want, safe banking, 280E, everything, it's still going to take a long time to implement.
Plus, it'll open up, like I said, I think it'll open up the door to the big players who will just come in and gobble up market share.
Well, they will, but I make the analogy of the craft brewing industry. There's always going to be a Budweiser out there that's going to, be the dominant national player. But there's all these craft breweries that exist all over the country, and they're doing just fine. And they can compete with the big boys too. And I think that cannabis is one of those industries where people are very passionate about their brands and what they like and what works for them, for their, specific needs, whether that's pain relief, getting high, or whatever. People are very, loyal to their brands. And I think that, if these MSOs come out and they gobble up a bunch of brands, well, they'll be the Budweisers of cannabis, but there's still going to be, a lot of, unique craft players in this industry that will do just fine.
Yeah, I mean, we believe the same thing. We believe that folks, there's always going to be a segment of the market that's going to care where it's grown. It's going to care how it's grown. They're going to want to make sure that it's organic, locally sourced, that kind of stuff, which isn't different than the craft market or the wine market or anything like that.
Yep.
So that will continue to exist.
Right.
So when folks come to you, what's going on? What are they dealing with when they come to you?
Well, what I'd like for them to do is come to me when they're just getting started.
I mean, before they
So
have all their
look at
problems?
well, we can look at their corporate structure and figure out, hey, how can we structure this, from a tax advantage standpoint. I'm a lawyer, JD LLM, and then I work with lawyers well, but I don't practice law in an accounting firm. But from the get-go, we can get them structured correctly. Then we can help them, with their books and records. And what oftentimes is overlooked is these companies that are looking to maybe sell their company really don't pay attention to their books and records and get everything, their house in order, until they get a letter of intent or something that says, hey, someone's interested in buying my company, and they're like, great. Then they want to put all this information into the data room, and it's all not good, and they
Yeah,
need to
the
make
due
sure that
diligence, it falls apart in the due diligence, right?
exactly, it does. And then the valuation drops, and then they think their company's worth 50 million, but now they're going to offer them 20 million because their books and records don't reflect a $50 million company. So there's just a lot of things that need to be done ahead of time, and you need to just be prepared so that when you are ready to pull the trigger and have an exit, then you got your tax returns in order, you've got your books and records in order, you have maybe a quality of earnings report or something done to just show the potential investor, or even the buyer, that, hey, management's got their act together.
And I know that you're LA based, but are you guys nationwide with regard to these services, or are you
Yeah,
California?
we're
Where?
nationwide, and what we offer other that's unique than other accounting firms is that we can also do audits in the US and in Canada. And we have an IT consulting practice that looks at your tech stack to make sure that your POS system communicates with metric, communicates with your financial reporting system. So all those numbers tie, because what you don't want to do is get into some sort of an excise tax return and then try to figure out, well, metric says I sold 100,000 units, and then my POS system says I sold 110 units, but my financial reporting system says I sold only 99 units. Well, which number do you use? Which one's correct?
It was funny. I was talking with a client of mine the other day, and they were bitching about their accountant. So, and this is in defense of the accountant, but they were bitching about their accountant because, um, there was some discrepancy that was really a small number, and they couldn't understand why the accountant was just like making such a big deal. And I'm like, no, no, no. I'm a numbers guy. I'm a finance guy. The numbers are either right or wrong. They're not close. Right?
Yeah.
So that what your accountant is telling you is that if the numbers are off, the numbers are off. And
Yeah.
it's not, for anybody who's a numbers person, it's not about how far off. It's just like, no, they're off. We have to figure out why they're off.
Well, and it just, makes it appear, to an outsider, that if this number is off, even if it's a small amount, then what other numbers are off? And then in total, that means that maybe there's maybe $1 million swing one way or the other, because there's all these little numbers that are totaling up to 1 million all of a sudden.
Yeah, I mean, the fact that you can't reconcile means that there's integrity issues with regard to the
Yeah,
numbers, right? And so that's the
exactly.
biggest concern.
Yeah.
And then what other things are you seeing with regard to for your clients that they're talking to you about?
Yeah, I mean, they're just really, frustrated with way, the economy and things are going. I
Those
mean,
are your California
during the
clients, right?
pandemic, they did pretty well. I mean, they were deemed, essential businesses. They
Mhm.
were able to stay open when a lot of places had to shut down. They were able to maybe pivot from doing in-store sales to doing curbside delivery or whatever. And so they managed pretty well. But unfortunately, now things are kind of changing a little bit, and so people are having less discretionary dollars to spend on cannabis like they had before. And so there a lot of them are hurting. One thing that's going on out there that I do want to, advise your audience about is that, there's something about the employee retention credits that are getting a lot of attention right now. And what's happening is there's a lot of fly by night, operations that, are not accounting firms. They're not, they're just, one man shops or whatever that are saying, hey, I can get you 28,000 per employee.
Yeah, I
And
get
what
that
they're
email all
doing,
the time.
yeah. And so, but there's a lot of hurdles that you have to go
Sure.
through to get that 28,000. And so what unfortunately I think is happening is that these entities are coming in, just taking a look at how many employees do you have? You have 100 employees. Great. Times 28,000, that's 2.8 million, whatever, in credits coming to you. They send that off to the IRS. The IRS is not been really doing too much due diligence in those returns. You get this $2.8 million credit. You think it's great. But what's going to happen is that the IRS is now starting to, take a closer look at those applications because they're getting inundated by these, you know, other entities that are filing, on
Yeah.
behalf of these clients. And, those entities are going to basically shut down and be off in the Bahamas or wherever. And the IRS is going to say, hey, you owe us 2.8 million back,
Right.
because this wasn't legitimate. And so now you're going to be stuck with this bill and you're not going to be able to have any default audit defense or anything from this fly by night, store. So I highly recommend that you go with a legitimate accounting firm, someone that has got some experience with this, that goes through all the, you know, dots the I's, crosses the T's, does all the things that you need to do in order to make sure that, hey, if you do get the credit, it's legit. And then there's somebody there to stand behind you 2, 3 years from now.
And also, you mentioned earlier that, for the folks that are looking to get in and get out, do you work with entities to help them in the M&A activity and prepare their financials for investors and things like that?
Oh yeah, definitely. And it's kind of like, going to a doctor's office. We do like a checkup, and we can just go through and figure out, okay, what's right, what's good, what's wrong. What do you need to work on? Where are some holes in your finances and things that need to be cleaned up, because cannabis companies, just as a general rule, aren't the best when it comes to, looking at the back office stuff. They're more looking at, making sales. And we can do this, free, transaction checkup to, get everything cleaned up before, you're ready to do a merger.
Merger or some, yeah, maybe an acquisition, those types of things.
Exactly. And we do valuations, and we can, like, because if you're thinking your company's worth 50, but then a valuation comes in and says, hey, if you got your books and records cleaned up, maybe you're worth 55 million instead of 50 million. It can be good to have an outsider kind of look in to see what's going on there, so that
Yeah, it never hurts to have a second opinion, especially when it comes to, the offer, right? Like, that number's high, that number's low, gives you some other insight into, you know, whether or not you should accept the deal or go keep looking or something like that.
right. And you want to do these things ahead of time because, we're, here at the end of October. Let's say you get, an offer, from an investor or somebody November 15th, and they want to close the deal by the end of the month, end of the year.
Mm.
Well, that doesn't give a lot of time to get, things in order. So it's always just good to be, ahead of the game and be prepared.
Well, Mike, we very much appreciate your time today. We appreciate those insights. We're all looking forward to better days, or at least, where it gets a little easier. But we will, if folks are looking to get more information about the services you offer, where can they find you?
Yeah, they can find me at Armanino, right there, my logo there, but Mike.Goral, Goral, at armaninollp.com.
And I'm assuming they can also look for you on LinkedIn.
Yes, I'm on LinkedIn as well, and Leaf Trade, all of it.
Okay, great. Mike, thank you very much. We appreciate your time today. Thank you for those insights. We
Right.
hope that, again, the next time we talk, it'll be much easier, and you can tell us how to spend our money that we've all saved from the new laws. So
Exactly.
Great.
Thanks again, Mike.
Thank you.
Take care. Bye.